On August 4, 2025, the digital asset XRP is a major topic of conversation in financial circles. Its price currently hovers around $3.05, marking a notable increase of over 5% in just the last day. This recent surge positions XRP as a strong performer, even outshining Bitcoin amidst a broader market recovery. However, this short-term gain is set against a backdrop of recent volatility. The digital currency has actually declined by more than 7% over the past week, illustrating the unpredictable nature of the cryptocurrency market. This fluctuation underscores the constant push and pull between bullish enthusiasm and bearish caution that defines the asset. XRP's market capitalization stands at an impressive $181.61 billion, securing its place as the third largest cryptocurrency by this measure. This prominent ranking highlights its significance within the digital asset ecosystem. The asset recently achieved a new all-time high, touching $3.66 on July 17, 2025. That peak was a moment of celebration for its holders, but the subsequent pullback to levels around $2.79 served as a stark reminder of the market's inherent volatility. Now, the price is testing the crucial $3 support level, a technical line in the sand that traders are watching very closely to gauge its next potential move. The broader context for XRP's performance is a cryptocurrency market that is showing signs of renewed strength. The total value of all digital assets has climbed back above the $2.3 trillion mark, recovering from a recent liquidity crisis that had shaken investor confidence. This rebound provides a favorable tailwind for major altcoins like XRP. In fact, XRP has been one of the leading gainers during this recovery phase. Large-scale investors, often referred to as whales, have reportedly been accumulating the asset, suggesting a belief in its potential for further growth and stability in the near future. This renewed interest is not happening in a vacuum. A significant recent catalyst was an announcement from the Trump administration regarding the creation of a U.S. strategic crypto reserve. The inclusion of XRP in this reserve has added a layer of legitimacy and potential government-level demand for the asset. This development, combined with the general market upswing, has helped XRP consolidate its position. Its current price action is therefore a complex interplay of recent news, technical support levels, and the overall health of the global crypto market, making it a key asset to watch. The value of XRP is not determined by chance. It is influenced by a powerful set of interconnected factors. The most significant of these is the regulatory landscape, particularly in the United States. For years, the lawsuit brought by the Securities and Exchange Commission has cast a long shadow over the asset, creating uncertainty and suppressing its price. However, recent court rulings have largely favored Ripple, the company most closely associated with XRP. As the case appears to be entering its final stages, a positive resolution is widely expected to unlock a wave of institutional investment that has been waiting on the sidelines for legal clarity. Beyond the courtroom, technological utility and institutional adoption are fundamental drivers of XRP's price. The XRP ledger was designed for fast and low-cost cross-border payments, a direct challenge to the traditional banking system. This use case has attracted a growing list of major financial partners, including giants like Santander, Bank of America, and SBI Holdings. These partnerships, especially those expanding in key markets across Asia and the Middle East, demonstrate real-world application. The more banks and payment providers that integrate the XRP ledger into their operations, the greater the intrinsic demand for the XRP asset becomes. Competition is another critical element shaping XRP's destiny. It operates in a crowded and rapidly evolving space. Stablecoins like USDC and USDT offer price stability for transactions, while other protocols like Stellar present similar solutions for cross-border payments. Furthermore, the traditional financial system is not standing still. The SWIFT network is developing its own blockchain initiatives, and governments worldwide are exploring central bank digital currencies. For XRP to succeed, it must not only prove its technological superiority, but also maintain its competitive edge against these powerful alternatives. Finally, the strength and sentiment of the XRP community play an undeniable role. A large and vocal base of supporters helps maintain interest and demand, especially during market downturns. This community-driven enthusiasm is amplified by speculation around future developments, such as the potential approval of a spot XRP exchange-traded fund. While no formal proposal has been filed, the mere discussion of an ETF has attracted institutional interest and boosted short-term momentum. This combination of grassroots support and institutional speculation creates a powerful force that can significantly influence market dynamics. The idea of a single XRP token being worth $100 is a dream that captivates many long-term holders. However, when we ground this aspiration in current market realities, it becomes clear that such a price point is not on the immediate horizon. For XRP to reach $100 in the near term, its market capitalization would need to swell to an astronomical figure, surpassing the valuation of many of the world's largest public companies. This would demand an unprecedented and almost unimaginable surge in new capital flowing into the asset, somewhere between $11 billion and $58 billion according to one analysis, which is highly improbable in 2025. What would it take for this fantasy to become a reality in the distant future? The transformation would need to be monumental, extending far beyond typical market cycles. First and foremost, the XRP ledger would have to become the undisputed backbone of global finance, processing a significant portion of the trillions of dollars that move across borders every day. This would require near universal adoption by central banks, commercial banks, and major financial institutions worldwide. XRP would need to evolve from a speculative asset into an essential utility on a global scale, similar to how oil is fundamental to the energy sector today. Furthermore, the entire regulatory framework for digital assets would need to shift dramatically. A future where XRP is valued at $100 would likely be one where global regulators have established clear, favorable, and unified rules for cryptocurrencies used in banking. The uncertainty of the SEC lawsuit would need to be a distant memory, replaced by a new era of legal clarity that encourages, rather than hinders, institutional integration. Governments would not only need to accept XRP, but actively endorse its use as a core component of their financial infrastructure, potentially as a bridge currency between different central bank digital currencies. Some long-term forecasts do entertain the possibility of a $100 XRP, but they place this milestone far into the future, often in the 2038 to 2039 timeframe. These predictions are based on models that assume exponential growth in adoption and a fundamental re-architecting of the global payment system. Reaching such a valuation is therefore less a question of short-term trading patterns, and more a bet on a complete paradigm shift in how the world moves money. It remains a fascinating but highly speculative long-term possibility, dependent on a perfect storm of technological dominance and regulatory approval. While the $100 price target remains a distant dream, analysts have offered more grounded predictions for XRP in the near term. For the remainder of 2025, many experts believe that a continued positive trajectory is possible, especially if the regulatory environment becomes clearer. Optimistic forecasts for late 2025 suggest a price range between $5 and $15. This growth is contingent on several factors, including a favorable outcome in the SEC case and continued momentum in institutional adoption. A more conservative analysis projects a potential high of $5.81 and a low of $2.05, acknowledging the market's capacity for both growth and correction. Looking further ahead, predictions for the period between 2026 and 2030 are also more modest than the triple-digit fantasy. One bullish model, which assumes XRP becomes increasingly integral to global banking, projects a price of $8.60 by 2026 and nearly $27 by 2030. Conversely, a bearish scenario, where XRP loses ground to competitors like stablecoins or Swift's blockchain solutions, sees the price at a more subdued $4.67 in 2030. These figures highlight that even in optimistic long-term scenarios, steady incremental growth is considered far more likely than a sudden explosive surge to $100. It is crucial for any potential investor to understand the significant risks involved. The cryptocurrency market is notoriously volatile, and prices can swing dramatically based on news, sentiment, and broader economic factors. XRP is no exception. Regulatory uncertainty remains a primary risk. While recent developments have been positive, an unexpected negative ruling could have a severe impact on its price. The competitive landscape is also a threat, as a more efficient or better adopted technology could emerge and erode XRP's market share over time, limiting its long-term potential. Ultimately, navigating the world of XRP requires diligence and a clear-eyed view of both its potential and its perils. The information presented here serves as a snapshot based on current data and expert analysis, but it is not financial advice. Past performance, including the recent rally to an all-time high, does not guarantee future results. Every individual should conduct their own thorough research, consider their personal risk tolerance, and carefully evaluate the asset's fundamentals before making any investment decisions. The future of XRP is unwritten, and its journey will be shaped by forces that are still unfolding.